Hey everyone, welcome back to another episode of Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving deep into a topic that's often underestimated, but arguably more important than any strategy or indicator you'll ever use. I'm talking about trading psychology, specifically in the context of Forex trading. Now, if you've spent even a few hours in the currency markets, you know what I'm about to say is true. This market doesn't sleep, and neither will you, unless you learn to manage your mindset. So, in this episode, we're going to break down how the 24/5 nature of Forex trading challenges you mentally, emotionally, even physically, and how to build the psychological strength needed to thrive long term. Whether you're just starting out and searching for Forex trading for beginners step by step, or you've got a few trades under your belt but still feel emotionally drained, this episode is for you. Segment 1: The 24/5 Trap: Why Forex Traders Burn Out. Let's start with the structure of the Forex market. It runs 24 hours a day, 5 days a week. It kicks off in Sydney Monday morning and doesn't stop until New York closes late Friday. That's 5 straight days of movement. Price never stops ticking. Now, this accessibility is part of what makes Forex so attractive. You can trade before work, after dinner, in the middle of the night, whenever you want. But here's the kicker: just because you can trade all day doesn't mean you should. One of the biggest psychological traps for new Forex traders is the pressure to always be in a trade. You think, if I'm not trading, I'm missing opportunities. And that mindset leads to overtrading, screen fatigue, sleep loss, and eventually bad decisions. To avoid this trap, set trading hours that align with your life and your region's best trading times. For example, if you're in Europe, the London and New York overlap might give you the best liquidity and cleanest moves. If you're in Asia, the Tokyo-London crossover might be ideal. Either way, pick your session and commit to showing up with energy and focus during that time, not 24/5. Segment 2: Overtrading and News Addiction. Let's talk about another mental hurdle: overtrading, especially during high volatility sessions. You've probably seen this play out. News drops, the market spikes, and you feel this intense need to jump in. It's adrenaline. It's FOMO. But here's the truth: news trading without a plan is just gambling. If you're wondering how to trade Forex news, the answer is simple but not easy. Wait. Let the volatility unfold. Let the market reveal its direction. Don't try to outguess the initial move. Events like non-farm payrolls, CPI releases, or central bank rate decisions can create massive price swings. But smart traders don't chase the first spike. They observe, analyze, and then execute with control. Trading around news should never be reactive. It should be structured, strategic, and backed by risk management. Segment 3: The Overnight Position Dilemma. Now let's address something that trips up a lot of traders: holding trades overnight. It sounds fine in theory. You've got a strong trend set up and you think it'll keep running. But then you go to bed and you can't sleep. Your mind is racing. What if there's news? What if I wake up to a margin call? That stress isn't just annoying, it compromises your judgment. You start closing trades too early, or you widen your stop loss just in case. Or worse, you check your phone at 3 a.m., see a red candle, and exit in panic, only for price to reverse by morning. Here's what you do instead: use hard stop losses and take profit levels, and honor them. Avoid holding full-size positions overnight unless your strategy calls for it. If you're consistently anxious about overnight trades, reduce your size or stick to intraday strategies. Protecting your mental bandwidth is just as important as protecting your capital. Segment 4: The Mindset Cluster: Emotional Control, Patience, Discipline. Let's break down the core of trading psychology into 3 pillars. I call this the mindset cluster. First, emotional control. You will have losing trades. That's not a possibility, that's a fact. But how you respond to those losses determines your longevity. Do you revenge trade? Do you spiral? Or do you calmly accept it, review your journal, and move on? Second, patience. The market won't always give you a signal, and forcing trades is a rookie move. Professional traders often wait days for a perfect setup. Beginners want action every hour. That difference is mindset. Third, discipline. This one's about sticking to your rules, especially when it's inconvenient. It means not increasing your lot size randomly. It means walking away after you've hit your daily loss limit. Discipline is boring, but boring builds accounts. Segment 5, Simple Strategies plus Self-Knowledge. Let's shift gears and talk about strategy, but from a psychological lens. A lot of people search for Forex strategies for beginners, hoping to find the magic formula. But honestly, the best strategy is one that fits your personality. If you're high strung or impatient, scalping 5-minute charts is probably going to burn you out. You'll obsess over every pip and make emotional decisions. Instead, go with something that gives you space. Try 4-hour charts. Use moving average crossovers. Trade 1 or 2 pairs, like euro to US dollar or pound sterling to US dollar. Let price come to you. Simple setups plus psychological compatibility equals confidence. Segment 6, Understanding Leverage and Risk Management. Next up, Forex leverage and risk management. Because nothing messes with your psychology like using 100:1 leverage on a $100 account and watching it evaporate in minutes. Leverage amplifies everything, gains, and stress. That's why understanding how Forex leverage works is a critical part of your mindset game. Start small. Use low leverage. Respect the math. And most importantly, risk no more than 1 to 2% of your account on any single trade. That way, a loss doesn't emotionally wipe you out or financially wreck your plan. Strong risk management equals emotional safety. It's your mental cushion in a volatile world. Segment 7, Ongoing Mindset Maintenance. Now, let's talk about ongoing mindset maintenance, because this isn't a one and done deal. You don't just fix your psychology and move on. You practice it. That's where community, education, and support come in. One resource I highly recommend, especially if you're early in your journey, is the Crystal Ball Markets podcast. It's packed with insights on trader psychology, real world stories, and practical advice that keeps you grounded and focused. Hearing how other traders navigate emotional challenges can give you clarity on your own patterns. Segment 8, Platform Support for New Traders. And if you're just getting started, having the right tools is everything. I always say, don't trade on platforms that overwhelm you with flashing lights and complicated order flows. For beginners, I highly recommend checking out crystalballmarkets.com. It's a beginner-friendly Forex platform with clear risk controls, clean charting tools, and educational resources that don't talk down to you. If you're serious about building trading discipline, this is a great place to start. The interface is smooth, the tools are smart, and it's built with traders, not gamblers, in mind. Wrap up final thoughts. Let's wrap this up. Forex trading is a mental sport. Strategies matter. Indicators help. But if your mindset isn't solid, none of that will save you. So here's your checklist. Set clear trading hours. Avoid emotional reactions during news. Respect the risk, especially overnight. Master emotional control, patience, and discipline. Choose a strategy that suits you. Use leverage wisely. Learn continuously. Journal everything. Because at the end of the day, your edge in this market isn't your system. It's your psychology. Thanks for listening to Financial Market Insights for Traders. I'm Sophia, and I'll catch you next time. Until then, trade smart, manage your risk, and take care of your mindset.